Welcome to Markets Now. I'm Michelle Rook along with Nick Tsiolis with Farmers Keeper, and we've got right across much of the commodity board this morning, Nick. And of course, soybeans and corn ended higher yesterday, as well as the product values kind of working in this frost in Argentina, but we didn't take out last Monday's highs. So, is that news all worked into this market?
I think so, Michelle. We keep testing these resistance levels of 13.95 or $14 in November soybeans and 6.90, 6.95 in December corn. And there's just not enough gusto there in the market. Everybody's expecting a shorter Argentinian crop. So no matter how severe or not that frost is in Argentina, that's not necessarily been a catalyst here, as we're seeing, for the market just to take off. We already were expecting short stocks there. So don't just be looking in the market for bullish reasons that we're going to go to $20 beans, because that's not a guarantee.
Yeah, and we've been chasing a lot of headlines, including political headlines here lately.
Sure.
And I guess, what's your advice on that note? Because you don't want to get caught up in that either, do you?
Well, I think, look, every day, especially for the past couple months, we've been just trading around South American weather, which makes sense seasonally, not a problem. Now there's more news in here with Biden visiting Ukraine and Putin's address to the nation a couple days ago. That's new information about the war, but that's other political factors that are also already factored into this market. And, we're still sitting at really respectable levels on old crop, especially going into a really big inverse. It's time again, unlike the way we've been trained the last couple of years with strong cash basis and a futures market that keeps going up. These things are all a cycle, and it's time again to say, hey, what's a profitable decision? How do I make this profitable decision? And how's that going to factor into my crop insurance spring price that's going to get set here and finalized in the next week or so?
And so right now, you think that the marketplace is saying really old crop, it doesn't pay to store, and that there is some pretty good downside risk here, perhaps?
Absolutely. I think that there's a lot more downside risk built into this market versus, seeing $8, $9, $10 corn. And even at that case, you just have to look at the opportunity cost. You already, in a lot of areas still with your old crop, you're looking at over $7 cash corn. What more are you looking for versus the risk of losing to the downside, right? So few factors that I think everybody should consider is, if you're working on an operating note right now, or you've got bills coming up to pay before planting, you've got to factor in interest and those costs, let alone the cost of carry in the market right now and opportunity costs. So if you factor all that in, and with cash basis kind of slipping in some areas, if you're holding out on that crop, you better be looking for at least a 30 or 40 cent jump in futures to make up for all those other factors that are real costs on your farm that you don't necessarily see on the screen every day when you open up prices. You got to be thinking about that. That's profitability.
Yeah, and tell me about what cash basis levels are doing around the country. They've been so strong in the West, but are those starting to slip a bit?
I've got news internally from my sources that a bunch of the feedlots out west now all of a sudden are overbought because they were so worried for such a long time here, and now they're kind of sitting high on stocks. And again, that's another cycle that happens with commodities, right? We put ourselves into a position because of droughts or too much rain or anything like that, or demand factors, to where we start to have to buy up to secure that. And we're seeing domestically, at least in those cases, that stocks are back filled up there, and that's going to make some of your basis slip. That's a big concern.
Yeah, no doubt. Now, you did a webinar here recently on how to use grain pricing tools. What would be your one piece of advice out of that?
My piece of advice is, first of all, anything that we talk about on that webinar is not just applicable to how farmers sell their grain through Farmers Keeper when you're not necessarily attaching it to an elevator yet, but all the information for that is basically universal with some variation at any elevator that you're delivering to across the country. An HTA or a min-max or an average price or an accumulator works very similar across any elevator. The big key is, it's important to understand how to use them and when to use them, what conditions are out there to use them, so you can be a more educated grower about why you're making decisions, instead of I'm making a decision because I think corn is going to go up or down. It's beyond that one step. And we want to be a good resource for people to understand that, whether or not it makes sense for you to sell that grain through Farmer's Keeper, or to go direct to the elevator, or to do it in your futures and options account because you're not worried about margin money.
One last thing, what are you watching now as we go ahead? Because we're transitioning into Brazil's harvest, obviously, and also into our growing season. And we're still watching, even the winter wheat crop come out of dormancy here pretty soon. So what are you watching?
A couple things. Wheat stocks globally, if we look at what India is going to produce, if we look at what Russia's expecting, are going to be really high, which is a big change from what we've seen in the last few years with a stagnant wheat market relatively the last several months here after the war got settled in. Next thing I'm looking at is we are going to plant a lot of corn and beans this year, potentially maybe more than 93 million acres of corn. That's taking out acreage from crops like cotton that took a big hit. We're hearing it from producers that work with us. So we're going to plant a lot of corn and beans out there this year, and we're due for a big crop. Despite all the drought concerns across the country, we're walking into this planting better position than we have in many areas over the course of the last 2 or 3 growing seasons. If we do that, and you as the American producer do what you're best at in the world, which is producing a big crop, we're going to reset our stock situation, and it's time to rethink what profitability looks like. Don't be hooked on those 20% margins from last year. We might go down to a scenario where it's 5 to 10% profitability. And when you put that in perspective, it's still going to be pretty good. Be smart about covering your costs. Play with the house money.
All right. Thanks so much for joining us. That's really good advice this morning. Nick Tsiolis with Farmer's Keeper here on Markets Now.
Thanks, Michelle.